So at this time, I don't know if Joe's awake. He's up, listening. Are you going to sign back in? I hear him.
All right, well, thanks. Thanks for that very informative presentation. 1031s are very powerful, but at the same time, they can get complicated, and that's why you need an expert to help you navigate through it. Once again, you can go to the dialog box in the upper right-hand corner, click on the orange rectangle and type in your questions. We got a whole bunch already. Some of them you already covered, so I think they keyed in the question before you had a chance to get to it, but here are some easy ones. Can you 1031 from or into a commercial real estate syndication?
The answer to that would be no if it's a true syndication, because a syndication by virtue is usually a partnership, and therefore you're not getting real property. So if you're referring to the syndication as actually being a partnership where you're taking your equity from that transaction and putting it into with multiple people, then they're creating an LLC and you're just going to be a member of that LLC, then no, that does not qualify. Now, sometimes people use the word syndication very loosely. Maybe they're talking about something like a Delaware statutory trust. In that instance, then that would qualify, because that is sanctioned by the IRS under Revenue Ruling or Procedure 2004-86. So while it might look like a syndication, it actually isn't, qualifies for like-kind property. But if it is a syndication where we're talking where you're going to have a partnership interest, the answer to that is no, because that's expressly excluded from 1031.
Right, because syndication is not really like real property. You're really buying a security.
Exactly. You're buying the security, and the entity that is buying the property is the entity that owns the real property.
Right. Mm-hmm. Okay, you mentioned you can't 1031 into foreign properties. What about the other direction? Can you sell a foreign property and 1031 into the U.S.?
It works both ways. Yeah, you can do an exchange foreign for foreign. Okay, and while that sounds, oh yeah, cool, there's a few things you need to understand. One, most foreign countries have no idea what a 1031 is, and you're dealing with possible exchange rate issues, so it's not as easy as it may sound. And then some closings, like we've had transactions, for example, in the UK, where the solicitor, is the party that's handling it, and they sometimes refuse to even entertain this. So foreign for foreign only, but it has to be for investment purposes, not for your vacation villa in Tuscany. All right.
Okay. On your 1031 identification form, what do you have to have the exact address of the properties you're replacing with?
Yes, you have to have either the exact address and or the legal description or an APN number. Okay, you can't identify, for example, if you were buying a condo, you can't identify 123 Main Street and not put the unit number, because what are you buying? The entire 24 units? You have to be specific. When you're buying new construction, okay, because we're seeing some of that, some of the new construction may not be completed by the time that you have to do the identification, but may be finished. You may be able to complete it by the time the exchange needs to be done. They may not have an address, so you're going to be putting the legal description along with the improvements that are to be made, because in most cases they're not there yet. So it gets a little bit complicated, but yes, you have to put in the address and or legal description or an APN number, city and state.
Okay, I noticed you didn't have zip codes in your examples. Do you not need zip codes?
Zip codes aren't required.
Okay. I would think you'd want to be as specific as possible.
One, sure, but it's not, yeah.
Okay. And does the property have to be in contract within 45 days or just identified?
Excellent question. The answer to that is no. I mentioned there's the technical and there's the practical. The technical means that you can give me, say, we'll use a 3-property rule just for ease of discussion. You can put 3 addresses, and then you say, okay, hey, Joe, I'm coming to you now. Here's these addresses you showed me. I saw it on the website, right? And so I put these addresses in there. Let's go make some offers. And then so they reach out to you on day 50. And you go, oh, Dino, those are already under contract. Uh-oh. So you can still, that's what you've identified. They don't have to be under contract. But now I'm trapped because they're not available. So what am I going to do? So from a practical standpoint, you should be under contract, but you do not, it's not a requirement. but you can't buy anything that's not on that list.
Okay. All right. You mentioned that, oh, you want to advance to the next slide that has your contact info while people are, yeah. So you can look at that while we're going through the questions. You mentioned the LLC and the revocable trust is disregarded. What about land trusts?
Is it a pass-through trust? Is it a grantor trust? So as long as, who's the taxpayer, is it what it gets down to? Okay, because people will use land trust to hide the ownership of a property, but how are you reporting it on your tax returns?
Okay, so who's the taxpayer? Okay. Steve had a question. Roughly how much, what's the ballpark? What are the exchange fees? Let's say I was going to sell one property and buy three. What are the fees?
Yeah, $1,000, runs around $1,000. You know, 700 for the sale, 300 for up to 3 purchases. We don't charge for anything else. That's our fees. I like to say the accommodator's fees in these kind of transactions is the least expensive thing that saves the most amount of money.
Right. I mean, the ROI on that's got to be huge.
Yeah, you can run those numbers.
Yeah. Okay. Derek has a question. If you're using the 200% rule, do you have to close on all the properties on your identification list?
No, you don't have to close on all the properties on the 200% rule, nor under the 3 property rule. That's why you want to stay between those 2 rules, because because you've stayed within the guidelines. You do not have to close on all of the properties under the 200% rule. You do not.
Okay. Does it make sense to have an extra property there just in case? Let's say you want 3 properties, so you identify 4 just in case there's a problem with one of the 3. You have a fallback.
Well, is that 4th property going to throw you obviously in either the 200% rule or the 95% rule? So you have to be careful what's that 4th property.
Okay.
Okay, so if that 4th property is throwing me in the 95% rule, then I would say no, don't put that in there. If that 4th property is throwing me in the 200% rule, then yeah, no problem.
Okay. I think you covered this one. His accountant says he needs to pay back the depreciation expense if he sells his rental home. Does he still need to do that if he does a 1031?
The answer to that would be no, because the recapture tax is deferred. Now you bring up a really interesting point there, because there are times where it might not look like you have gain on the sale of a property, because say, for example, I bought an investment property for $150,000 and I've owned it for 14 years. And now I'm selling it for, say it's in a property that didn't appreciate much over the time. Now I'm selling it for $175,000. So, right. So on the face, I bought it for $150,000. I'm selling it for $175,000, but I've owned it for 14 years. After paying all the closing costs, it looks like, well, where's my gain? Well, the tax complications are going to be in the depreciation, because the depreciation lowers your basis. And over the time, that could end up being, a 25% of something that might be 100,000. I'm making large numbers here. I know Joe's sitting there going in his mind going, depreciation on 150,000, that's just too much, but you get my point. For the ease of math, that's 25,000 in taxes that you didn't think you had because you were selling for only, but after the closing costs, you didn't think there was much in the way of gain. So depreciation is a downside, when you're selling the property. And so even though it may not look like you have a lot of gain, that's a tax consequence. So yes, you do get to defer the tax on the depreciation recapture.
Okay. If the relinquished property is held by an LLC with 2 members, say husband and wife, the landscaper has decided to do landscaping right outside my window right now. I hope it's not making a lot of noise. So if the relinquished property is held in an LLC with a husband and wife, can one spouse do a 1031 on his part and the other spouse not do a 1031 on her part?
Ooh, okay. So how is the LLC treated? Is it an LLC partnership, or is the LLC disregarded? Are they in a community property state or non-community property state? Okay, so if it's, okay, so let's cover both. All right, so if it's LLC is regarded, then the answer is that no, because you can't, the LLC has to do the exchange. If the LLC is disregarded and he's only exchanging his half, then she's going to pay tax on hers, because only his half is being exchanged.
Right, okay. So Talk to Dino. That's the answer to that one.
And the tax advisor.
Right. Going back to your partial exchange example, if someone bought a house for 100,000 and sold it for 200, and then decided to hold back 50, do they have to pay tax on the 50?
Yes. So let me fine tune that, because sometimes there's a little confusion when you're talking about doing a partial exchange. So yeah, that would be if you held back the 50 and the gain is 100,000, just for ease of this discussion, then you're still protecting tax on the 50,000. Okay. So the 50,000 that you're taking out, you're taxed on that full 50,000. It's not divided between the basis is not divided in that. So sometimes people think, well, don't I get the 50,000, the basis that goes along with that 50,000 in gain? And you do not. I like to say that when you're thinking about doing a partial exchange, all the gain, all the tax on the gain is coming first, like a latte, right? It's all foam at the top. All the tax is coming out first before you even get to the basis. Sometimes people go, well, yeah, but I already paid tax on my basis. That's fine, but you didn't pay tax on the gain, and the government's going after the gain portion first. They're not going to tax you on your basis because it's already taxed. It's been taxed. So you can't straddle anything. So only that portion is going to be taxed. Hopefully that wasn't too confusing.
Okay. David asked, why does everyone stress about 1031s? Because 45 days seems like plenty of time.
It may seem like it. It depends on the market conditions that we're in, actually. Right now, we're in a market conditions that even all what's going on, the inventory levels are low from what I'm understanding. You know, Joe, you can correct me, but you know, and every area is going to be a little bit different. But when you have low inventory and people are still out there buying, then you're in a line with a whole bunch of other folks trying to find the suitable replacement property. So it can be stressful because of trying to find what you want. That 45 days does go by very fast. So you have to be on top of it. My recommendation is when somebody is getting to the point where they feel very comfortable that their buyer is going to perform, all the contingencies have been removed, that maybe you start making offers on replacement properties now, because that way you can do your due diligence. You can get, you know, you can weed out the properties you don't want. You know, you can be under contract with the replacement property before your sale closes. You just have to be very careful that your closing on your purchase comes after your closing on your sale. So there's maybe some contingency language that you might want to include when you're doing something of that nature. But I will say that the 45 days can be stressful because of inventory levels, maybe the number of buyers that are coming in. You know, so it's challenging. It can be challenging.
It can be challenging, especially if you're buying off MLS, because then you're competing with everybody out there. The advantage of buying through RealWealth Network is that our property teams in the various markets can hold property for you. If they have 10 houses in inventory and you need 3, you pick the 3 you want and they'll hold it and facilitate the exchange that way. And some of our markets have a lot more inventory than others. So if you're doing a large exchange, talk to your investment counselor. Certain markets like Dallas and Atlanta have tons of inventory. Others have not so much. So if you want to buy 5 houses, you don't want to look at 5. You want to look at 10 or 15 and pick the best 5. So ask your investment counselor to point you in the right direction.
Well said.
All right, we're coming up on the hour here, so I guess we'll just wrap this up now. The webinar will be posted by noon tomorrow on our website under recent webinars. Last question from Robert is, do you give out your slides?
Yeah, well, yes. Yes,
Yeah,
right.
where are they on your website?
These slides are not on my website, but I can, if you've got my email address down at the bottom there, dino@apiexchange.com, I can forward you a set of the deck.
Okay, perfect. All right, well, that's all we have, the time we have for today. Thanks for attending. Obviously, this is a topic we can go on for hours and hours about. So thanks, Dino, for presenting. And if you have more questions, you can contact your investment counselor or contact Dino at the email address below. And with that, we'll close it off for today. Thanks for attending. Bye, everyone.